We're going over IRS Form 2220, Underpayment of Estimated Tax by Corporations. So in this video, we'll go over the form itself, and then we'll go over Schedule A of this tax form in a separate video. Just like individual taxpayers, corporations are expected by the IRS to pay estimated tax throughout the tax year. And under certain circumstances, a corporation or a trust or a tax-exempt organization may have to complete IRS Form 2220 just to either verify that they do not owe an underpayment of estimated tax penalty, or to calculate the penalty and add that to their tax return. So there are 4 parts to the tax form itself. There's Part 1, which is the required annual payment. There's Part 2, which is reasons for filing. Part 3, which is calculating the underpayment. And then Part 4, which is figuring the penalty itself. So in corporate tax returns, the IRS prescribes an interest rate schedule based on the amount of underpayment and the quarter in which the tax is eventually paid, and then the prevailing interest rates during that period of time that the tax remained unpaid. So let's go to the top. We'll start with the our company, Acme Enterprises, employer number at the very top of the form. So in general, you don't need to file this form. There are exceptions under Part 2 because the IRS can calculate the penalty when you file your tax return and then bill the corporation separately. You can use this form to calculate the penalty. There are certain instances documented in Part 2 where you have to file this form regardless of whether or not you owe a penalty. Okay, so in Part 1, we'll just enter the total tax being $103,000. This is just a placeholder, but this would be the total tax as you previously calculated on your respective tax return, whether it's 1120, 1120S, whether it's a 990, whatever the case may be. This is the tax that you calculated separately. And then in lines 2A, 2B, and 2C, you're backing out certain credits and taxes already paid. So in line 2A, personal holding company tax from Schedule PH of your Form 1120. In line 2B, look back interest either under IRC Section 460B2 for the completed long-term contracts, or IRC Section 167G for depreciation under the income forecast method. And then in line 2C, this would be the credit for federal tax paid on fuels, and you can see more in the form instructions. So in line 2D, you add the total of these, either taxes paid or credits or interest, and then you're going to bank them out and subtract that from the line 1 figure. So that's what we do in line 3, and we get to an even $100,000 of tax. In line 4, we'll enter the tax shown on the corporation's prior year income tax return. So on this form, this would be the 2021 tax return. If the tax is 0, or if the tax year was less than 12 months, then you would skip line 4. You'll simply bring down the line 3 amount to line 5 below. So the required annual payment is the smaller of either line 3 or line 4. So either your estimated tax for this year or 100% of whatever you paid last year. So in this case, we bring the $80,000 number down, and now we're ready to go to Part 2. In Part 2, we're going to check any applicable boxes, so as reasons for filing. So if any of these boxes are checked, the corporation must file IRS Form 2220 even if it does not owe a tax penalty. So in line 6, this would be if the corporation is using the adjusted seasonal installment method. line 7, you would check that box if the corporation is using the annualized income installment method. And so both of those methods are for corporations who might see irregular income or cash flows. For example, a ski resort might be very dormant for the majority of the year, and then they realize a significant amount of their income during the skiing season. So that would be an adjusted seasonal installment method. Or if you experience like certain items of irregular income, like at the end of the tax year, or you had a one-time event, you might use either of these methods because when you go through those parts of Schedule A, you might actually have a lower estimated tax quarterly payment than if you used the traditional quarterly method. And then line 8 is if you are a large corporation figuring its first installed requirement based on a prior year's tax. So you can find more information about what is considered a large corporation either in the instructions for this form or in the article that we've written that covers this in depth. And so in any of those cases, if any of those boxes are checked, then you do have to file this form, even if you don't owe a tax penalty. So in part 3, we're going to figure the underpayment. And what we did here is we just kind of populated the first 3 rows. And now, the installment due dates on line 9, we have 4 columns that represent the quarterly payments. So as instructed, the 15th day of the 4th month of the corporation's tax year. So we'll use this example as the corporation uses a calendar year, fiscal year. So April 15th, June 15th, September 15th, and then December 15th. And then the required installments. So you would either bring up the number from Schedule A, line 38, and that's if you're using either the adjusted seasonal installment method or the annualized income installment method. You would bring that number from Schedule A, line 38, up to the corresponding column. In this case, neither of those boxes are checked, so we took 25% of the line 5 amount right here. So 25% is $20,000. We put that across the board. In line 11, we're going to enter the estimated tax paid or credited for each period. So in column A, you're going to do a couple things. One, you're going to carry forward any overpayment of tax from the prior tax year. And then you're also going to take this number and bring it down to line 15. Every other column will be filling in lines 12, 13, and 14 and 16 with information from the preceding column. So now that we're in column A, let's go down and figure out the underpayment. So this is pretty straightforward. $15,000. We were supposed to make a $20,000 payment in this quarter. We only paid $15,000. So is this an underpayment or an overpayment? Well, line 15 is less than line 20, or line 10 with the $20,000. So we're going to subtract that, and then we're going to enter that number here. If this was an overpayment of $5,000, then we would put the overpayment here. So now that we are finished with column A, well, let me back up for a second. There should be only one entry in each column for either line 17 or line 18. You cannot have an underpayment and an overpayment in the same quarter. So keep that in mind as you're going through this form. In column A, we end the quarter with a $5,000 underpayment. So now we're going to go up to line 12 of column B, and it says enter of any amount from line 18 of the preceding column. There is no line 18 amount because that's the overpayment. Now we're going to add lines 11 and 12 This is the estimated tax paid or credited. So we paid $35,000 in the next quarter, and we're going to add lines 16 and 17 of the preceding column. We only have line 17, so we're going to put $5,000 there. And then we're going to subtract line 14 from line 13, and we get a total of $30,000. Now, if the amount on line 15 is 0, then we would subtract line 13 from 14. However, there's actually some number here, so we're going to enter 0. And now we go through the same thing that we did in column A. If line 15 is less than or equal to line 10, then we would enter an underpayment. However, it is not, so we're going to go to line 18, which is the overpayment. In this case, line 15 exceeds line 10 by $10,000, and that's what we're going to put here. So now we went from an underpayment of $5,000 to now we're overpaid $10,000. Now we're going to carry this line 18 up to line 12 of column C. We're going to add 11 and 12, and we get $25,000. Then we're going to add lines 16 and 17 of the preceding column, in which case this equals 0. So now we're going to subtract line 14 from line 13, and we get $25,000. Now, if this amount were 0, we would subtract line 13 from line 14. There's a number there, so we're going to enter 0 for that. And now we need to determine if there's an underpayment or an overpayment. Since line 15 is greater than line 10, there's an overpayment of $5,000. And then for the last quarter, we'll carry that $5,000 up to line 12 of column D. We're going to add this with the estimated tax on line 11. We get $20,000. We're going to add line 16 and 17 here. Of course, the answer is 0, so we're going to bring this $20,000 down. And then we're going to apply that to line 10. It says less than or equal to line 10, so we will subtract them, and we have a net result of 0. Okay? Now, in any situation where there is no figure entered on line 17 at all, that means you withheld the appropriate amount of tax throughout the tax year. You do not owe an underpayment penalty. You don't need to complete part 4, although you may still need to keep this form if you used either of the adjusted seasonal installment method or the annualized income installment method. Okay, so since there is an underpayment for the first quarter of 2022, we do need to go into part 4 and calculate the penalty. So in line 19, we'll enter the date of payment or the 15th day of the 4th month after the close of the tax year, whichever is early. So basically we'll put so now if we made the payment, then we would put that information in there. Now the number of days from the due date of installment on line 9 to the date shown on line 19. Okay, so that's a year, right? A year from April 15th. So that's the number of days. The number of days on line 20 that were after April 15th and before July 1st. So that would be April 16th through the 30th. So that's another 15 days. There's 31 days in May, and then there's 30 days in June. And that gives us a total of 76 days. So then the underpayment that was on line 17 we're going to multiply that by the number of days here and divide that by 365. So we have the $5,000 underpayment. We're going to multiply that by 76, and we're going to divide that by 365. So, and then we're going to multiply that entire thing by 4%, because that was the prevailing interest rate that the IRS published for that period of time. And in this case, we end up with $42. So then we go the number of days on line 20 after June 30th of the tax year and before October 1st of the tax year. We've got all the days in July, that's 31 days in August, and then we've got 30 days in September, so that's 92 days. And now we're going to take the number of days of line 23, multiply that by the underpayment on line 17, multiply that by 5%. We're going to do the same thing over and over for the number of days on line 20 after 12/31/2022 and before April 1st of 2020. Line 25. The number of days on line 20 after September 30th, 2022 and before January 1st, 2023. So that's the entirety of October, the entirety of November, and the entirety of December. And again, that would be 92 days. And we're going to now multiply this figure by 6%. Now these percentages are not arbitrary. They're actually published on the Internal Revenue Bulletins, and they're published quarterly. So at the time that this form was created, these numbers were already published. As we go further through the form, we'll see like these are for future years where they were not published at the time of recording, but they were, or at the time that this form was generated, but they were eventually published at some point. So, you know, recording this in July, the interest rate for this period has already been published. It happens to be 7% as well. And they usually publish a quarter in advance, so it happens to be that the upcoming schedule, I believe, for later quarter is also 7%. So the last one that we will do, actually there will be two more because we have to calculate the underpayment penalty between April 1st and April 15th. So number of days on line 20 after basically January through March. So again, that's 90 days because February only has 28 days, but January has and March have 31. So now we're going to take this amount and multiply that by 7%. And finally, we're going to take the number of days on line 20 after March 31st and before July 1st. So that happens to be 15. And now we're going to do the same thing. We're going to use 7% for this line 30 number. and that happens to be. So if you had additional payments like afterwards where you're filing this form, then you would keep going through this and you would eventually get to the total. So in line 17, we're simply going to add lines 22 all the way down. We stopped at line 30, but you would keep going. So we're going to add all of this up, and we get $281. Okay. Now you would do this across columns if you had late penalties, but we only had one late penalty in this one column. So we don't need to apply this to the other columns since there were no underpayments, right? So that was the only underpayment. If there were additional underpayments, we would be going through this for respective columns. In this case, we're simply going to carry over the 281 down to here. You would add this to line 34 of your IRS form 1120 or whatever the comparable line is for your tax return. So that's all we have for this form. Stay tuned. There will be another video regarding Schedule A in the case that you determine that you'd be better off using either the adjusted seasonal installment method or the annualized income installment method, or you want to do both just to see which one is the lower tax liability. So if you were to use either of those schedules, then you would use those amounts from line 38 of Schedule A right here in your required installments payment instead of the traditional quarterly tax payment. So that's the one thing I want to highlight here and why we're going to cover those calculations in Schedule A at a later point. So again, that's all we have for IRS Form 2220 itself. We've written a complete step-by-step guide for this tax form, which you can find on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 2220, and you should see this article appear. And if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, as always, please hit me up in the comment section. Thank you very much and have a great day.